While the bottom end of the market is struggling, luxury is holding in just fine. A condo building going up in ultra-exclusive Fisher Island just broke ground last week, and the two penthouses already sold, she said. For some stunning numbers, let's bring in Diana Olick with all the details. Diana?
Hi, Kelly. Yeah, hold on to your wallet. The two penthouses, which don't exist yet because they just broke ground, sold for a collective $150 million, and that's cash. The 10-story building will have just 50 residences from 3 to 8 bedrooms and indoor-outdoor spaces. Of course, all of the 5-star amenities come with. The building is now nearly 60% sold and should be delivered in 2026. I spoke with the developer, George Perez, CEO of Related Group, also known as the Condo King of Miami, about the current state of the market.
Look, I'm paid to worry, right? In 45 years, I have seen many ups and downs. I think the South Florida economy in particular will continue to have ups and downs. Those people that tell you it's going to go straight ahead, have up, it doesn't. And why doesn't it? Because developers are a little bit of cowboys, right? They overreact to the increases in demand. The demand's still there, but the competition, I think, is going to be brutal.
Luxury condos are selling, but older buildings are facing big new expenses following the collapse of the tower in Surfside. That's creating a huge divide. Take a look. Sales of Miami condos priced below $300,000 were down 9% annually in August, with new listings up 83%, and the bulk of those are older condos. Sales of condos priced above $5 million, mostly new product, were up 100%, and new listings up 37%. I asked Perez what he thinks will happen to those older buildings.
We're going to be seeing more and more of the older buildings being demolished, and new buildings, probably more high rises, being built in South Florida.
And Related Group is breaking ground on 5 new luxury buildings in just the next 3 months. Back to you guys.
So part of this, Diana, is driven by, as I understand it, we're going to talk about this a little bit more with our next guest. Part of this, as I understand it, is driven by revisions to building codes following that collapse in Surfside, where older buildings now have to bring their products up to newer code.
Yes, exactly. And that can cost millions of dollars. And so you have the owners of these condos who are looking at higher fees to their condo associations now, trying to unload these properties. I spoke with another expert in Miami who told me if you have an older condo pre the year 2000, you just can't unload it. Those were his words. And people are trying to, obviously, when you see that inventory of sales so high. But it's those new fees that are costing the condo board, the condo owners, of course, that really want them getting out.
Diana, thanks very much. And let's pick up where Diana just left off on the Miami condo market and turn to someone who has firsthand knowledge and experience in luxury real estate in Miami. Back with us is Stefania Mogollon. She's a real estate agent at Ancona Real Estate. Stefania, welcome. Good to have you back with us. Let's address that question. You've got older buildings, lower market prices, and so forth, that may now be hit with very high, the owners may be hit with very, very high assessments to bring those buildings up to the current code and avoid a tragedy like we had in Surfside in 2021. Are those buildings going to be able to do that? Or ultimately, are many of them going to go into receivership, get bought by, let's call them opportunistic investors, that's a nice way to put it, and demolished and replaced by luxury high-rises?
Well, that's the big dilemma. It is already happening. It's not something that we will see in the future. It is already happening. Condos are selling for around $120,000 with an HOA of $1,800 a month. So it's not sustainable. These buildings have to keep up with the new recertification law that came about after the collapse, and they don't have enough reserve. They don't have enough capacity to put the building structurally sound and up to code. So the homeowners either have to cope with the expenses, which is, as I said, very unrealistic for a person that can only afford $100,000, $200,000, $300,000 condo. How are they going to be able to pay $2,000 and $3,000 a month on top of insurance, on top of taxes and the regular maintenance
And
of
so
their
what will
property.
happen to these people, many of whom may have been in their condos since they were built in the 1990s or 1980s or earlier? Where do they go as they are forced now to sell into a depressed market where buyers are going to say, hey, I don't want any part of one of these buildings where I may be, I can't get it insured, I may be subject to rising HOA costs?
Well, they have a few alternatives, either sell at a loss and hopefully somebody can cope with these expenses, or live in the property and see what happens. The bank may take it back, they may lose it. If they don't have the funds to cope with these assessments, there is not much they can do. And also, if there is no buyer willing to purchase these properties and cope with these expenses, there is not much you can do.